What's up, everyone? How's it going? Welcome to today's market analysis session. Today is Thursday, October the 30th, day before Halloween, and I'm gonna be honest, we were not active during market session today, so once again, zero trades. Like, I need to get back within my regular schedule, right? I'm not gonna lie, I clicked snooze on my alarm, woke up at 8:50, so I hope it doesn't happen again. And to do that, I'm setting up alarms on my phone as well as my physical alarm so that I get like literally pushed to wake up. So with that being said, let's get into our analysis, right? So I'm gonna remove all my charting stuff. Actually, I don't think that would be necessary. Remove this, of course. All of that, but this can stay. I'm gonna remove that as a prior trade we've taken before. So essentially, it's actually pretty good as to what we're seeing, right? Because, hold on. Let me just add this here. Today was essentially no significant news day. But yesterday was a significant news day, especially in the afternoon. And what happened yesterday was FOMC, in which Powell said a bunch of things, but he said that they're kind of iffy on an interest cut for December. Because of that, we saw a big sharp drop during this FOMC session, which you can see the volume right there. And post-market on the same day, we had earnings for Microsoft, I'm pretty sure Google, Meta, and then I believe we had eBay and Starbucks as well. But out of these, two of them were negative, one of them were positive, but the market tends to consume negative things much more in depth, right? So, of course, fundamentally, we've seen Apple and Microsoft go down, Meta go down. So overall, we've seen cumulative downwards move from some of our biggest companies on the market. And that's simply post-market, right? Now, hold on, hold on. If you take a look at Microsoft, right, we see price gone down. Why earnings were consumed negatively by the audience. And that information was given post-market after earnings release and has continued on through the day. And was Nvidia also earnings? Hold on, let me see. Let's see. I don't quite remember if there were. I think we mentioned this yesterday. Okay, so yeah, I mean, if you take a look, right, most of the things that were post-market, right, post-market negative, tended to. Oh my god, hold on. Damn. Most of the post-market earnings that we've seen was instantly comprehended by post-market movement, and that post-market movement, sorry, and that post-market movement carried out throughout the day for our magnificent seven stocks. And let me show you why that's important. Oh my god, 7 stocks have gone down in a group of 500 stocks in the S&P 500. Well, let's simply search this up. How much percent of the S&P 500 is the Mag 7? Okay, hold on. 1/3. Okay, 33% approximately of the S&P 500 is our magnificent seven stocks. So I mean, if 33% of all stocks go down and nothing significant has happened to that other 66%, because this 66% will include other tech and those types of things. And typically, when the Magnificent Seven goes down, other tech tends to follow suit because of different collaborative partnerships and things of that nature. Typically, they have a very high correlation rate. While, so let's just assume that another additional 20% is correlated with that, right? Even if it's not, if 33% has gone down and the rest has been flat, nothing crazy happened, what will happen to the whole thing? It will go down. Like Meta went down 11%, right? But if we take a look at the S&P 500, we've only gone on 1%, right? Because that's power of diversification. But here, assuming that that 20% is there, so assuming a total cumulative tech and big companies that we all know, maybe around 50 to 60%, right? Now, if 50 to 60% go down, it's highly likely that the entire index goes down. Hold on, let's see why. Highly likely that the entire index goes down. And it's pretty cool to see that the 5x long Magnificent 7 ETP has gone down 8%. So that's cool to see as well. And that's all because of earnings. So here's a potential strategy that one could test as well, right? If one sees earnings post-market, and post-market the price has gone down after the earnings release, then we can expect price to continue going down upon market open and exit at the close. I might go ahead and test that strategy out. The strategy is quite interesting and I will have to look more into it, but it's not necessarily a bad idea to test systematically, but we're kind of getting off track. The point was a lot of fundamental factors that build up the ETFs that we trade in the futures versions have hinted at a negative suit. And as a result, what do we expect to happen to the S&P futures? We expect it to follow suit as well. One thing I can do, hold on, I'm going to see if I can do this right now actually. I'm going to code up a simple program and simply see if I can visualize the you know what, I don't have to do that, it's going to take a bit of time. I'm not trying to do that right now, but essentially I was planning to mark out a scatter plot and mark out the returns, the daily returns. If we take a look at the Magnificent 7 daily returns and the S&P 500 daily returns, how correlated are they? I would assume that it would be something like, pretend these are scatter plot, I would assume it's something like this, right? So the correlation is extremely high where the R squared is phenomenal. It's probably going to be high, but not too high. So there's that. But essentially, with that fundamental factor in play, and with the fact that FOMC into negative as well, what did we see happen post-market yesterday? We actually saw price go up and take this upper liquidity. Now, this is a very, very, very key area that we have to see what price does at that region, right? Sorry. Right, we saw this, and look at this move, right? The entirety of this move happened with almost zero volume. Like, the volume that was happening here, not significant whatsoever. And this was the FOMC volatility, right? So this big downwards candle is purely FOMC. Then we started to rebalance it, come back down, and we're basically net downwards, and we filled that gap in from FOMC. And then we saw a big downwards move start to occur here. 23.35. So yesterday at 11 p.m. 30 minutes. Let me see if there's anything bad. There was nothing. Perhaps something would have happened here. See this huge candle with such high volume. Interested to know what happened then. Interesting. Mm, Something would have happened then that would have caused such high volume. But that's okay. We saw that prices went up there, and that's what matters. So let's see what happened there. I mean, volume is not crazy significant at all. Okay, let's see. Good. Let's just focus on this current market and see what was there. I'm gonna go ahead and open up Bookmap to do that as well. Hold on. I'm just going ahead and opening my Bookmap right now. The Bookmap stream, of course. There we go. The spread of liquidity on Bookmap doesn't look bad coming into market open, but what would be our idea coming into market open? Because we do have this 4-hour demand zone here. And right upon market open, we do happen to push below pretty significantly. And I'm going to assume that we take out this lower liquidity. So it looks like we took out that lower Bookmap liquidity, right? I'm just removing all my drawings here. Oh yeah, one thing I did forget to mention. Still, from the weekend to Monday, we had a pretty big gap up. And typically, we want those types of gaps to become filled pretty soon, right? And with this selling action, we do look to have almost filled the gap on a higher time frame. Alright, let's take a look here. Almost filled that gap, right? Because the top bound of that gap was up here. We've gone more than 50% within that gap, right? That's... I would like to have it filled more, but it looks like we're starting to rebalance here back to the off. Something we'll have to notice for the following days. But hold on, let me just mark out the liquidity that would have been bounce below. There we go. I see they have a lot of liquidity there in the 1 hour, but let's just notice the reaction of the Bookmap, because that's going to be more important than everything, right? And we do seem to have significant levels on Bookmap, so honestly, the conditions don't look bad to trade. They look pretty good, so unfortunately that we missed it. Hopefully there were trades that we could have taken potentially. Took out that lower liquidity. I want to see what happens here. Just skip forward a few minutes. Okay, wow. We took this liquidity, started to consolidate, saw induction of passive sellers, went up near it, and then we saw 984 sell icebergs, and then the sells came in extremely big. So whatever happened here was definitely some big player in the market, likely an institution or something of that nature, or whoever, and price dropped phenomenally. So I want to see when that iceberg would have been. The iceberg is located right there. This is actually very interesting stuff right here. Hold on, let me move forward. Hold on. 8:30. Assume that's like A7 right here. I'm starting to see these buyers getting trapped at the top. Then we see sellers continue. Nothing I would have taken, but just something interesting to see in real time, right? But as the market is going down, all these passive buy orders are getting filled. Open the door. Now we don't really have much significant levels anymore. We have this we have this level here, we have this level down here. So now we're being patient. Now we've seen lower liquidity drop, so now we want to know where price is going to head next, right? Because we've seen a downwards move. Where does price want to go? And we can't really figure that out right here. And if you look at the price action for today, after say 9 a.m., it was pre-consolidating, right? Down, up, 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 right? It's not necessarily, it's decent price action, but it's more so within a consolidation range, and that's something we need to see. Let's see. Honestly, nothing I would have taken anyway there. Let's see here. That's quite interesting. Was that there before? It was. We see liquidity flipping here, but that being said, no seller absorption at that region. 48. I mean, we're seeing pretty immense buying pressure here. 100, damn, 170 ticks on yes, that's pretty good. Pretty good stuff to see. We had good volatility today. Perhaps too much? I don't know. Let's see. I mean, now we're heading upwards, but take a look at spread of liquidity. Of course, there's levels above, but we're at VWAP right now at 50. This guy here. Oh, those. Not seeing any real targets here other than 6885 and perhaps one at 6920, 6915. Probably 6920. But we see price start to stall up here, and now we're testing this lower barrier. If you see absorption there, longs could be decent. That's interesting. I don't. This thought. Maybe would have taken a losing trade here today. I don't know. Right. So what I'm seeing is price has gone up. Right. We saw flipping of liquidity, and we're seeing passive buying urgency start pushing up in the market. Right. And particularly we have this barrier right here, and we have this 6915 level alongside this 6920 level, right? Now, if sellers do get absorbed here, potentially we can head up just like that. And I mean, we do kind of see that happening within this 55 candle, right? We see price coming down into here, and then we're seeing selling action occur. So perhaps an entry would have been found 6905. So let's just assume we're taking this. Of course, there's going to be more discretion involved, but assuming we do take this, god damn, and we already keep our stop, right? We took out this level. We have this, so 6895 would probably be my stop. $40, god damn. No, there's no way. That's a pretty wide stop. Maybe 90, because that was the area that's holding. To keep within a decent risk, I would keep it at 20 ticks max, 20, 25 ticks. So 9-0 is not a bad level. I'll keep it at 22 ticks because that would probably be what I would have done. And my target, the upper level is 1.5, so it would have been 4.5. Ooh, cool. So we would have been 2 ticks away from our target. If we don't hit our stop loss first, and that's what I'm looking to see what happens first. Okay, cool. Okay, so this is quite interesting, right? Because looking at it right now, we would have gotten stopped out. But look, we've gone almost 2 ticks to our take profit, right? We're thinking we're going to take profit. So what do? Of course, we're moving our stop to break even. Maybe 1 or 2 ticks above break even to occur for fees and cover those, right? So this trade, I would consider break even, right? It was close to working out, but looks like it would not have worked out. A lot of volatility here today. I'm liking it. Okay, let's see what happens next. Moving down here. And now direction's kind of iffy now that selling is here. Because you have the 6890 level down here. Which, as you can see, does happen to be quite an area of rejection. Ooh, this is good stuff that we're seeing right here. This is very good stuff, I'm gonna be honest. This lower liquidity region became very, very significant. Became 690, and that's a really significant amount. We've went down into that area. A big seller got filled, and now we have big selling amount right here. Cumulative delta, right? Just take a look at this. Look at this. We have 60 buy orders at that area. Tap into it. Over 600 sell orders got filled at 6890, and you can see this right here. Oh wow, more than 1K sell orders actually got filled there. And this is just the delta. So big selling action right there, and then we start to move up. See, now at this point, it starts to look pretty bullish, right? Big sellers down below. Sellers get trapped. Now look what happens here. A very big passive buyer comes in and shows buying urgency, right? Now, this could be a spoofing order. We don't know. So there's 2 ways you can play. It's either a spoofing order or as a bear retracement. And that entirely depends on what price does, right? If we retrace towards this, and we actually start to see absorption at this area for sellers, then I can enter longs. And that's if this order starts to get filled. If we start to continue heading higher and this removes and price starts to reject again, then maybe we could go short. We start to go down. Oh, okay, bet. It's pretty perfect, I'm not gonna lie. So this does happen here, and that was at 892. So that's all the way up here still. That's within this candle. Am I tripping? 892. So that's probably here. Yeah. That selling activity was here. This previous selling activity was down here. So we actually go even lower than that. And oh my god, man. Look at this. So what I'm seeing now, there's a big passive buyer that really wants to enter into the market, right? And look, if we start to reject from there, I would have taken long, no question asked. But we just bursted through it, and now a passive buyer with 1,000 buy contracts wants to get filled there. And what happens? They do exactly that. They get filled. And look at this. We're having 530 buy icebergs. And we have selling icebergs there as well. So now we start to reject, but I want to see if selling absorption actually occurs. Because there could be really nice longs that are here. Oh my god. More aggressive passive buying. Price is starting to head up a bit. I mean, I wouldn't have taken anything yet, unless I would have taken under discretion, but this is very interesting stuff nonetheless. Longs don't look bad here. It's passive buyer entry. But I want to see some type of push up confirming these longs and then retracement where we do see some seller absorption or some good value entry to then enter long. If I don't see that, I probably wouldn't have entered long. Ooh. Look at how many market sellers have gotten in at this area, at this 6890 area. And then we start to see buying pressure just pop in right as 10:30 hits. And with that being said, I do want to see if there's news today at 9:30. Okay, we did have natural gas storage at this time, so no trades then. But spread of liquidity is looking really fantastic. Thought lots of trapped sellers down here. I want to see if there's any retracement area that potential entry can have been found. It looks like there might be one there, but look at this passive buyer urgency that we're seeing. It's really cool stuff. There. If we don't break below this, I might want to gauge an entry there. That's at this candle right here. Okay. I don't think any orders get filled there, do they? Nah, they removed their limit order. Buyer icebergs there though. This looks to be a very good entry, right? So I would have entered long here, right? We've been seeing all these hints that an aggressive passive buyer is coming in. Now we saw this buying iceberg get struck in, right? Oh wait, hold on. 3,000 sell icebergs up there. Hold on, that's interesting. Oh my, that's quite a lot of stuff to happen at once. There's pretty crazy volume going on. I don't know if I would have entered because of this fact. I'm gonna be honest. This right here makes me want to enter, but this being there kind of invalidates that trade. I'm gonna be honest. But assuming we would have entered, right? I'm not saying we would. We would have played out, right? Would we have entered? Maybe, maybe not. Assume that we did. 335, 96, 9650. So really good entry location. Stop loss below that region. So 92.5. Right around there. Take profit at 6909.5. Oh my. Yo. This trade right here is like pretty insane. I'm not gonna lie. Oh, this really interesting stuff that we've been seeing here today. I'm kind of sad that I missed it. But yeah, I don't know if I would have entered it, but if we did, it would have been really nice. Near 3 risk reward trade with good risk management as well. It's just that big buyer iceberg, and oh my god, look at this. We've removed it from there, flipped it up here, buying urgency at its finest. Then we push above that buying, and then we continue to head up straight to the profit target. And now that passive, that's very interesting, right? Because take a look. Right after we took that level, look what happens to our lower passive liquidity. It gets removed. After that, we start coming down again. Simple liquidity sweep, right? Now, there's not much liquidity here, but this buying delta in itself, it's pretty extreme. And it makes sense why it's the higher volume now. Not seeing any trade opportunities yet. A lot of stacks selling liquidity on the bottom. Now that just keep moving forward. A lot of up and down choppy action. It's gone back up to the high volume node. Nothing I'm seeing there, but simply because of the fact of the lack of passive liquidity on Bookmap. We're just simply hovering around the place and seeing that. So let's see if there's anything. Nothing I would have taken per se there. The delta is starting to cool down at least a little bit. Yeah, and that pretty much concludes that session, right? So, I mean, we had some really interesting stuff happen today, right? And those longs had some signals that we could have leveraged, right? This one, it's kind of iffy if we would have taken it or not. If we would have taken both these trades, we would have had a break even and one winner here today. If not, we would have just ended the day break even, because I'm gonna be honest, I don't know if I would have actually taken this trade simply because of the fact that we saw insane amount of buyers just get absorbed there with those seller icebergs. And that's pretty significant, right? So it's a sense of passive. Natural gas storage pumped up. Then they start to retrace back down. In terms of technical analysis, it's not bad, right? You have this fair value gap or whatever, right? It's a 50% retracement. So a lot of technicals are lining up. So those just pure technical analysis traders may have got an advantage over me today, but this is some interesting stuff. I'm trying to see if he would have taken it or not. So I'm gonna go back to it. Just watch that exact moment. Wow. I mean, to be fair, we did make this entire move thing really quickly. Okay, this is a 35-minute video. I didn't expect it to be that long, but not bad, but it is. Just took it 9:35. So in this span of around 2 minutes, we headed down and we're starting to reject, right? So perhaps we could have gotten a later entry, right? maybe we would not have entered where we did enter. Maybe we would have entered at a later entry, like perhaps 900 right there. And then now the risk reward is 1.2 as compared to previously. You see it was like this. Pretty sure it was like this. No, it was like this, yeah. Compared to previously like this, right? So, I mean, it's not the easiest to tell. If we would have taken this, we would have, but unfortunately, we were not there trading the markets here today. And a lot of volatility happening, so you may have to risk down a bit for tomorrow as well. But that's all to be seen and talked about tomorrow. And that concludes my market analysis session for today. If you have any questions, feel free to either comment down below or join the completely free Discord server. Lots of good things that you can leverage for completely free. And that will be linked in the description down below as well. Additionally, if you want to check out the Bookmap and Footprint tools that I use, both have lots of free functionality. The Footprint tool is Addis, one of our channel partners, and both of them are linked in the description down below as well. Definitely recommend you guys to check it out. As always, do your own research. And yeah, that concludes this video. I'll see you guys tomorrow. Goodbye.